Aloha, everyone. I hope you're having a very nice weekend. It's been a very, very rainy weekend over on the west side of Maui, but the stock market hasn't been rainy. In fact, it's been full of sunshine, basically, for my portfolios. And as long as overall the new long positions keep working, I'm going to keep taking them. The past week, most worked, but there were a few that failed, and there are some not going anywhere. But overall, everything still looks good. So as long as that's the case, I'm going to keep plugging away. And for Monday, I only have 3 new long positions, 2 of quality. The first one is NOW ServiceNow. ServiceNow is an earnings winner. You see the gap up on the 27th, and on the 28th, you see the overall bullish price bar. It's closing in the upper half of its intraday range. You have a test of the previous low and a successful test above average volume with a BOP surge. This is a CanSlim quality stock, so that's an added bonus. And it was confirmed in my price volume BOP scan. So with it being a recent earnings winner, it's definitely good to go for me. Now you can see back here in February, it had a previous measured move of right around 100%. So obviously, I would look for a move like that. But to be more realistic, we should probably expect something more along the line of a 26% move. And if that's the case, I want to make sure that my first cut loss level is that recent low, 92.94. But first, my limit order is going to be at 94.48 because the stock is extended from its short-term moving averages, the 5, 10, and 20. I don't want to use the high day. I want to use the close. So 94.48 will be my limit order, my first cut loss level, the low a day of Friday session, 92.94. And then after I cut half of it there, I will then quarter my next stop at 91.21 and the last quarter at 90.22. So let's say I get 100 shares of NOW, I'll be out 50 with a move below 92.94. I'll be out another 25 if it touches 91.21, and I'll be out the remaining 25 if it moves below 89.03. So that's how I want to do it. ServiceNow was in my CanSlim scan, 2% for that scan, and confirmed in my price volume BOP scan. That's another 1%. Total 3% new long position. Like I said, 3 stops. Half here, a quarter here, the final quarter right there, 94.48. I like this chart. I don't love it. It is an earnings winner. And if you think that chasing it doesn't work, PRCP bought it here, still holding, up 17%. Then there's PXLW, bought it here, still holding. It's up 35%. And then recently for a higher price name, VRTX, bought it here, still holding, and it's up 8%. So the earnings winners are the kind of really the only time ever that I chase. And I don't chase, it's that I've seen these buyable gap ups over and over and over and over in my life, and my risk is always very limited. So if NOW fails, let's say 92.94, but it does it on heavy volume, and let's say that it loses its green BOP, heck, whatever the next low a day is, that will be my final cut loss level, and that'll be the case even if it doesn't touch 91.21, and especially if it doesn't get all the way back to 89.03. So it depends how it pulls back. FCH was a 50% sell signal on an end-of-day basis, and I've been knocked out of half of it. So 776, when it moved below that, I was knocked out of half. Now, does that mean that I move all of my stop up to this low? No, because I'll tell you why. It still has max green BOP. So half of my cut loss is with the move below 773, and my final stop for now is still the 50-day moving average, but still moving up some of that stop. So that's how it will work on NOW. Now I got an ETF long signal out of DGL. DGL is bouncing off its 200-day moving average and its short-term moving averages. If we pull this up and look at all of them, you can see that the 5 and the 20 is right there, right above that price bar. But you can see that it's bouncing right off the 200-day moving average on very strong volume with the surge in green BOP to max green. This stock, because of that volume surge, made my daily volume surge scan and my price volume BOP scan, so it's going to be a 2% long signal. You can see the previous measured move in this name, if we go from the lows to the highs, is 13%. And as you can clearly see, to our first cut loss level, we don't even risk 1%. And I'm willing to give it all the way to back here before I finally cut the pull position. But once again, a potential 13% move when we only risk about a total of 1.5% total on the position. Take that every time. That's over an 8-to-1 reward risk ratio. So we're going to go ahead and take that. But DGL, what I want to do, limit order at 40.62. If it's gapping up, I may use 40.71 as my limit, especially if it's gapping above 40.71. If it's gapping above 40.71 Monday morning, 40.71 will be my limit. If it's gapping above 40.62 but below 40.71, I'm not quite sure yet, but I'll probably stick with 40.62 as it's just a gappy kind of ETF, and I don't think that it's going to run without me. But either way, first cut loss level 40.37, moves below 40.37, I'm out a half. Final cut loss level 39.87, moves below 39.87, I'll be all. Now, let's say it cuts below 40.37 and loses its green bop, or does it on heavy volume and loses its green bop. Whatever that new low day will be, that will be the final cut loss level. DGL though, nice looking ETF. It's a good way to play the GLD. GLD is the same. I mean, you could do UGL. I don't care. It's just that I'm going to do DGL. It's the best looking technical pattern, and that's how my methodology works, so that's the one I choose. And then I have a swing trade position, and it's a good one, but it's a little risky. So if this candle that's printing on Friday would have been this candle on Wednesday, it's a perfect oversold swing trade candidate. But on Wednesday, I don't know about this stock unless I do a scan specifically looking for these kind of stocks. EIGR's RSI is below 30. I have a scan that looks for stocks under 10, RSI below 30, and it tries to find stocks that are doing what EIGR is doing now. Not only is EIGR under 30, but it's starting to curl up, trying to curl up above 30, and at the same time, the MACD line has gotten oversold, and it's now curling up. The black line, the signal line, is about to cross. The MACD histogram has already been moving up. So it's a very nice oversold swing trade candidate, but I want to make it clear it would have been better if this candle on Wednesday would have looked like the candle that we got on Friday. But finally on Friday, it finally bounced on heavier volume, and it did so with green bop, so now it's on my radar. It's still good enough for me to take. Limit order at 790, final cut loss level, the only cut loss level, a move below 735. So it moves below 735, I'll be completely out, but I'm not paying more than 790. My first profit target area is looking for a move right up to around the 930s. Then I would be looking at the 50-day moving average, and then if we get lucky, 1180, and that's probably best case scenario. But let's say it gets through 1180, then I'm looking at 1265, then 1370. But I think 1180 would be the absolutely best case scenario. 50-day moving average probably, but you never know. It's like I said, it's extremely oversold, and the MACD is moving up from oversold, and we've got a beautiful hook in the MACD RSI line with MACD histogram already leading. So it's a very, very nice setup. Very, very nice. We'll see if it works out. Is it perfect? Heck no. You know what perfect would look like? Max green bop the whole way down. Low volume on this move down, then the volume on that bounce surge. But for now, for my system, for my signals, for the way I trade, good enough. All right, everybody. I'll either see you back here on Monday or see you in the chat room on Monday. Aloha.